Okay. Now, I was going to write this email to somebody, and I still am going to send it, but and I thought to myself, I might just put that on a podcast, just a really quick one. And anyway, if you're not watching, you can listen. This one tells you what happens to their CBDCs. The lady asked me today about CBDCs, and I said, well, just have a listen to this podcast I did a while ago about the double French currency collapse, because the second currency they introduced only took 6 months to fail. And I go on in the email here and says, money has to have a store of value. Money is a commodity, not a blip on a screen. The money the market chose as the best store of value is gold, silver and copper. We did not always have central banks and governments issuing the currency. We had paper that had a claim on money, see attached. Now, let's see if I can have a look at these. There we go. Those of you that are not watching and are only listening, just wait a second for it to load. Oh, golly gosh, it wants to save it and all that stuff. So there it is. There it is. Let's have a look. No, there it comes. Yeah, well, patience. There we go. For those of you that are not looking, this is a silver certificate, and it says, this certifies that there has been deposited in the Treasury of the United States of America $1 silver payable to the bearer on demand. So it didn't say that piece of paper was the dollar. It said the piece of paper was a claim check on $1 silver. And $1 silver was about 26.5 grams, about 3/4 of an ounce. So that was your claim check on real money. You could go and take that to your bank and get your silver dollar back for that piece of paper. But that piece of paper never tried to be an imposter and pretend it was the dollar itself. It was only a note, a promissory note. And I go on there. Yeah, the note is redeemable and money is not money itself. Regardless of where I have put my money, I know someone who has all their wealth in silver 1 kilos, 1 ounce coins, and 1 ounces of gold. Just bullion, as close to spot price as possible. And my super fund looks the same as my personal holdings, exactly the same companies. When I receive a settlement, I just allocate funds to companies I own shares in and buy physical silver. I do not look to see what the dollar price of a share in a debt-free, free cash flow, dividend-paying company is on a particular day. I only care about how many shares I have in that company because the dividend is paid per share, not on the amount of dollars the company's worth. Why? Because the dollars are made up crap. The company's stock is a portion of the company you own. Buildings, production, vehicles, etc. That's all I got to say. Thanks for listening, guys. We'll see you on the next one.